Okay, so normally we'll do ladies first, but since Han has been waiting
no problem.
he has been waiting for a long time. That's okay. Yes, he has been waiting for a long time. Okay, so all right, fine. So let's do the recording now. What is your question? Tell me.
So I think the question is simple. So the status quo ante.
Yeah.
So I think you just stated ante as the before meaning, and I think it is means it just let me take example. Just for example, the screen. If the screen is going to be broken or be not used in the future, but right now it can be used. But in the future, maybe after about 5 or 6 months, it cannot be used. So now we maybe to some extent we must.
Yeah, I'm trying to get to your status quo ante repairs. Yeah, this is the part. Yeah,
we need to repair it.
Yeah.
So for the repairing process, it is important that if it is improved or enhanced, I mean, it is not to the original level or the normal.
It's more than that.
No, more than that.
Yeah.
More than the function of showing something to students
Yeah.
or teachers.
So I gave you the example, remember, of the status quo ante means before.
Yes.
Okay, ante is Italian
and
for,
also
Latin actually, for if you go to an Italian restaurant, when they give you the starters, they are called antipasta. The pasta is the main meal, and it's called antipasta, which is A-N-T-E. Ante means before. Before the main meal, whatever you have, that's a starter.
Okay.
That Italian restaurant, it'll be called antipasta, because the ante means before. Okay?
Okay, before the major one.
Yeah. So status quo ante means whatever was the situation before.
Okay.
Okay? Whatever was the situation before. In this case, it comes from the old saying, before status quo ante parabellum, that is before the war. Okay? Whatever is the old days, they were fighting all the time. So basically, whatever was the status quo ante parabellum, whatever was the situation before the war.
Okay.
So here, status quo ante means before. Okay? And so the repairs, so is basically, you have to think of it as being restored to the original condition where it was when maybe the damage happened. Okay, and so they are just restoring that. But if you try to improve the functionality or enhance the functionality, then it's not. So I give you the example of the bathtub. Let's say you have a normal bathtub which gets broken. Okay, let's say you're having this, there is a replacement of domestic items relief, right? So there is I think there's an example given in the textbook itself where in the property income calculation, there is a replacement of domestic items relief. So that one is only allowed if you have a like-for-like replacement. Like if you have, let's say, a normal chair like this, okay, and it breaks, and then you just replace it with a normal chair like this, maybe that costs like $100, okay, that will be allowed, okay. The normal replacement chair costs $100, that will be allowed. But if you buy like a fancy reclining chair with leather thing and all that, with a headrest and all that, maybe that costs like maybe $2,000. That $2,000 will not be allowed. Okay. They will allow only $100 by looking at how much it would have cost you to just replace the original item at the same level. At the same level. The moment you start improving it, or enhancing the productive capacity, that becomes basically like a capital expenditure, and that will not be allowed.
Okay, I see.
Okay, and that's why you can connect that to that other rule also, which I told you, the example of the ship that is given in the case, like Law Shipping Company versus the CIR, Commissioner of Inland Revenue, where the ship was bought. They bought an old ship, and that ship was not fit to sail at that time. When they bought it, ship was not fit to sail. Then they did a lot of what they called repairs on that ship to make it fit to sail. But if you're starting with something which is not fit to sail, it's not seaworthy, but you're doing a lot of what you're calling repairs and making it seaworthy, that means by definition you're improving the functionality of the ship. Do you understand?
I understand.
Yeah? So you're making the ship doing, capable of doing things it was not capable of doing before. That's why it will automatically get treated as capital expenditure. Even though you call it repairs, but actually it will be treated as capital expenditure, and under the accruals gap basis, you will not be allowed to deduct that expenditure.
Okay, I see.
Yeah.
I see. Thank you.
So
And
in the GAAP accounting, the difference between revenue expenditure and capital expenditure becomes highly relevant. Because if it is a capital expenditure, we will not allow that as a deduction under the accruals basis. But if it is a revenue expenditure, we will allow that as a deduction. So if you do a normal repair which only restores it to the normal, you take your bathtub is broken, you just replace maybe just repair the bathtub and keep it like the same as it was earlier, that's allowed because that's a repair, so that's a revenue expenditure. If you replace the bathtub with a very fancy jacuzzi which costs a lot more, that will not be allowed because that will become capex because now you're enhancing the functionality of that thing. Okay, making it something quite different. So that will not be allowed. So that the moment you do those things, you enhance the functionality, that becomes like a capital expenditure, and that's why under accruals basis that will not be allowed.
Okay, I think I understand this.
Is it clear now? Yeah, okay.
And
Good.
another one is customer entertaining.
Yeah.
And so you have told us it is not the same as
Yeah.
the staff entertaining.
Yeah.
Staff entertaining is allowed to be solved, and for the
Yeah,
customer
staff entertaining can be allowed as a deductible expense. Okay, so the whole focus is always on when we are calculating, like you have some examples, right? Where are the examples? We did some examples where we had like buying and selling and all that, right? Where we calculated this is actually under capital allowances, it's chapter 11. So when we did like chapter 9, so if we do chapter 9, maybe 150 or something like that. Adjustments, so various types of adjustments, and then we have exercises. Like we did this exercise for 9.6, right? So we have this thing written here under this. So let's say for instance here,
I think
9.6. Answer is on page 553. So 553, if we look at 553, where we are doing this thing, right? So on 553 is actually going to be 569 because we have to add 16. Right, see this, you see this?
Yes.
This is basically I think this is Linda, 9.6 Linda, right? So you started with a net accounting profit of 6960, and those expenses, so that's why the question is when you're trying to find out the tax adjusted trading profit, TATP, this number, how do you get to this number? You start with the 6960, but there are certain expenses which are not allowed as a deduction in calculating the taxable trading profit, tax adjusted trading profit, right? So those examples are given by our rules. The rules are telling us, the rules that you have to memorize, those are the rules, and some you can remember based on logic.
Okay, so
Those rules will tell you what is allowed, not allowed. Like personal items, she is drawing her salary, that is not allowed. So you have to add this back to this one. This, you start with the 6950 and then you're at 6960, you're adding back all these. So the question is, so in doing any kind of taxable income calculation, when you're dealing with a business, one of the important questions becomes, what kind of expenses am I allowed to deduct from my gross profit in order to arrive at my taxable income? Is this clear? What kind of expenses are allowed as a deduction
it's clear.
and what is not allowed? So that on that question we are coming to this. On that question, that it's at that point that our discussion about repairs and enhancement and capital, what becomes capital expenditure, those kinds of discussion become relevant in this context. The reason I'm showing you this is because this is the context. Because in calculating business income, taxable business income,
Yes.
we always have to be careful about what kind of expenditures are allowed and what are not allowed
Okay.
under the tax laws.
It is only depends on the rules.
Yeah,
Okay.
and that's why you have to remember all the rules.
Okay.
Yeah.
So when
So
when
it's your status quo ante, you're clear. You see,
It's
you see the connection. Are you able to see the connection between the status quo ante concept and the concept of repairs and enhancement? Because if you do enhancement, it's not just status quo ante. If it is just a pure repair, then it is status quo ante because it just brings it back to the previous situation before the incident happened, right? But if you're doing enhancement, then you're going over and above that.
it is
Okay.
not the original cost.
Yeah, it's not the original functionality.
Yes, definitely.
Think about it as functionality.
Okay. So when I want to consult you, say is, how should we solve the customer entertaining. So, which accounting subject, when we solve it, it will come to us?
Customer entertaining. No, customer entertaining is just, you will
It's
have
not the
some
same as
information,
this.
right? Like, you will have some information on, yeah, there you see, in this already you have some explanation. You have some information in the question. This is, now we are looking at the answer, okay? But in this question 9.6 for Linda, okay?
Yes.
You have some, in the question it is mentioned that there is some of the sundry expenses relate to business entertainment of 520.
Okay.
Okay, so that means that you have to remember the rule that business entertainment is not allowed. By business entertainment means that you're entertaining your customers, okay, to develop business. So that's not allowed
Oh, so
under the rule. So
so-
that's why we are adding it back. That's why we are adding it back.
Okay.
Is this
Okay,
clear?
okay. So the customer entertaining is in the business entertaining when we solve it.
Yeah.
Okay.
So these are all
Okay,
different
fine.
words that they may use to refer to the same concept. It is either they'll call it business entertainment, or they'll call it customer entertainment. These kind
Different types of
this kind of words will
entertainment.
be used. These kind of
Okay.
words will be used, and so you have to remember it as the same thing, which is, you'll see that when you go to the question right now. This is the answer. If you go to the question number 9.6, right, you'll see that it says that in that there is a part at the bottom in the notes. It says that the sundry expenses which are given includes 520 for business entertainment or customer entertainment, something like that is mentioned. And since we know it's not allowed, that's why we are adding it back, because in calculating the 6960, we had already deducted all the sundry expenses, including this one.
Yes.
Okay, we had deducted
we
this,
need
yeah.
to add it back.
You have to add it back, because that deduction is not allowed.
Okay. So,
Yeah.
So I think
Because
I
it's
agree.
reducing your profit, and that means you will pay less tax.
Yes.
But that reduction of profit is not allowed on account of business entertainment as one of the items which is not allowed.
Okay.
Okay, is it
Completely
clear?
the same thing.
Okay.
Thank you very much.
Okay,
then.
good.
Thank you.
Okay, good, no problem. Okay. All right, so, here's Hazel. Yeah, what's your question?
My question is about the question 16. It's about the year divided.
So question mark, from the question bank.
Yes, question bank.
Okay, all right.
Week 3.
Well, let's go to the question bank. Let's go to the question bank, and let's go to question 16. 16.
16A. Yes, here.
Yeah, okay, employment question, A. Employee was an annual, and then we have the answers as well, so let's open the answers file. Let's go to your, hopefully this is, no, let's open something else. Maybe we can open this one actually. So let's go to the, so we have this various question bank answers. So this will be under, this is under which question? Employee, okay, so this is under employment, okay, so let's open your employment questions, okay. Now, I have not yet written, because some of your questions are still in the question, the submission is still, the deadline is still open, so some of them, your question is question 16, okay.
Yeah.
Now you're asking about this, so we can maybe increase the view a little bit, make it bigger, and we can increase the view. That'll help us to see better, okay, view. And then we have, maybe we can make it like 125, okay? Right, now, that's your question. Okay,
See you next time.
okay, see you, bye. Now, where's the question? Okay, so your question is which one, on A, B, C, which
A.
one?
A.
A,
A.
okay. Question is on A. Employee was an annual salary of 36 until when he had a pay rise of 5%. His salary is paid at the end of every month. He's also paid a bonus on 1st April each year, based upon his performance up to the end of the previous calendar year. That's fine. Okay, this part effectively for an employee who's not a director, because here is no mention of director. So he's paid a bonus, so we just go by cash basis,
Yes,
right?
I know the
Whenever the
question
bonus is paid. So what is your question on this?
Question is only about the salary part, because it said his salary is paid at the end of every month.
Okay,
So I think it should not. The answer is divided the whole year into 7 to 5, but I think it should be 6 to 6.
Sorry, sir, what are you saying? It should be?
The answer says it should be divided into 7 to 5, but I think it should be 6 to 6.
Oh, you think it should be 6 by 12 and 6 by 12?
Yes, because it paid at the end of every month. So from the April 5th.
Okay, so let's see here. Annual salary until October 25. So April, May, June, July, August, September, October.
Yes, April, May, June, July, August,
September.
and October should be the pay rise of 5% part. So I think it should be.
Okay. So here, from the way the answer is given, we figure out that actually the pay rise. That means what they're saying is that he was on the original salary of 36,000
Yes.
until the end of October. So it's just a way of reading that language. So that language is not very clear. Okay. So we can see from the way the answer is given for 7 months.
Yeah.
That means they're counting October also on the original salary.
Oh, I got it.
All right. So
Oh.
that means that they have counted that, and that's why they have put. So this language is therefore, which is also a reasonable reading of that language. Actually, the language is ambiguous. So your reading is also correct. Your reading is that this kind of statement means that he got the pay rise from the 1st of October,
Yes.
according to your reading.
Yeah.
And according to the way they have worked out this question, their reading is that employee was an annual salary till the end of October.
Okay.
Okay, that the way is that the drafting could have been improved by saying that an employee was on an annual salary of 36,000 until the end of October 25.
And then the November would pay rise of 5%.
Yeah, and then make it extra clear and write it as, and from 1st of November, he was on a enhanced pay with a pay rise of 5%.
Okay.
That would have made it much more clear.
Okay, I got it.
Yeah.
Okay, thank you.
Okay, is that clear?
Yes, it's
Okay.
clear.
All else clear?
Yeah.
Everything else is clear?
Yes.
Okay, so the directions I'm giving are clear, right? Regarding, I have extended the deadline for the second assignment, which was due today,
Mhm.
but I have extended it till Sunday.
Sunday.
Yeah?
Yes, we all got that message.
Yeah, okay, great, okay.
Thank you.
So today, whatever I mentioned, whatever we discussed is, unfortunately, I couldn't discuss the balancing charges.
Mhm.
We didn't have time, so
Is
I'll
it
have to.
also very important, or it's not as much important as the exam part?
Which one? Sorry, I didn't get your question.
The charge part today, not
The
with-
balancing charge.
Yes.
I think we need to know about balancing charges because there may be a situation where you might need to apply the balancing charge.
Oh, okay.
So balancing charge is basically nothing but, you adjust for the depreciation, which is, maybe you under-applied the capital allowances
Mhm.
and you over-applied or under-applied or over-applied. So the asset is basically you look at the market value, because ideally what we want is book value and market value should be the same.
Mhm.
Okay, the book value should reflect the market value, okay, but it's not always possible. So sometimes you see that you're carrying it at a certain book value, but then when you sell it, like that car example that we did, where she sold the car, it was carrying at a book value of 8.4, and she sold at 8.6, and she sold it and she got 6.65,
Mhm.
right? In that example that we did, Joanne,
Oh,
right?
yeah.
So if you see that, so that's basically, now what is that showing you? That basically the book value and the market value are not the same,
Yes.
right? So by selling it, you realize that the market value is much lower than the book value, right?
Mhm.
So in this case, you will get, so what does it mean? It actually,
We
it
are
means,
paying more tax on this situation.
which one?
So, are we paying more tax on this situation?
Yeah, so because what happens is, that means you paid, like, basically, if you look at this example here,
8.6.
we had that example of Joanne. Joanne is actually, where is Joanne? It's actually page 164. If you look at the working of Joanne, page 164. Yeah, so capital allowances is basically, no, it's not 164, I have to add 16, so 180. Here's Joanne, right?
Yeah.
So here you can see an example of what is, I'm just giving you the sense of what is meant by the balancing charge and the balancing allowance. So balancing charge means that it will add to your taxable tax liability, and the balancing allowance means it will reduce your tax liability. That is, it will be given as a capital allowance. The balancing allowance is like a capital allowance. This amount can be used to reduce your taxable income, okay? And the opposite of this is the balancing charge.
Balancing charge.
The balancing charge is opposite of the balancing allowance, okay? So this is basically what it is. So now that's what, now why is this happening? Why is the balancing charge and allowance happening? Because, see, right now your carrying value is 8.6, okay? That which you are carrying for 8.6, you sold for 6.6, right? So if you were carrying it at 8.6, so the idea behind this is that what we want to have happen in accounting is that the book value must reflect the market value of the assets. That's why you have the true and fair picture, right?
Yeah.
Remember, in accounting, I put all this in your notes, that in accounting, what is the purpose of accounting is to present a true and fair picture of the business. And so that automatically means that the carrying value, the book value of the assets that you're carrying should reflect the market value as much as possible, right? Now, suddenly you find that actually there's like a 2K difference almost between the book value and the market value, which means that the book value was too high,
Yeah.
right? If the book value was too high, what does that mean? That is your carrying book value was too high, or carried forward book value was too high. That means in the previous period, you took less depreciation
Yeah.
or less capital allowance. That's why your book value is still high. Okay, if you had taken the proper amount of, that means what we say here is about 2K difference. So that means you took 2K less depreciation than you should have got,
Yes.
right? So that means you have paid more tax in the past, okay? So in this case, you will get a balancing allowance to reflect the difference,
Oh.
yeah?
got it.
That's the idea. So you have to understand first that the basic idea there is coming from that true and fair picture of the business. That is the accounting goal of accounting statements, to give a true and fair picture of the business.
So how should we deal with this 2K balancing allowance?
Yeah.
Should we
You will get an additional amount of that in that
Yes.
year.
So should we put it back after the PAYE or
Not
in
PAYE doesn't come in here,
Come in
TATP,
TAT? Oh,
not
okay.
PAYE. PAYE is pay as you earn, that is the deduction.
Oh.
No, in this case, what happened is they will give you that additional depreciation. So they will allow your taxable income to be reduced by this 2K amount. In this case, if this was happening in a case of balancing allowance and charge situation, then they will give you that. So that means what they're saying is that you took too little depreciation in the earlier years. That's why your book value is reflecting such a high figure of 8.6, but actually the market value is 6.6. That means you should have been able to take additional 2,000 depreciation to bring it down to the correct market value. So that means if you apply the rule that the book value and the market value should be same, that's something very important to remember. So that's because, and where is that coming from? The true and fair picture of the business. A purpose of accounting is to give a true and fair picture of the business, right? Which I've put into your notes here, somewhere here down below. The fundamental purpose of accounting is to ensure that financial statements as giving you the true and fair picture of the business, okay, right? So this is one of the important accounting principles. So this basically drives, where does this lead? If you have this, one of the implications of this is that the book value should reflect the market value, right? This means that book value should reflect the market value. So we can write this under balancing allowances and charges. Balancing allowances, okay, and charges, okay. Where is it coming from? That is basically, it's underlying this is the financial statement, the purpose of accounting, right? The purpose of the financial principle. This will automatically, and this will imply, okay, this, we can go to the other, this implies what? This implies that book value equals market value. Market value, ideally, okay? Not always possible. ideally, okay?
Yeah.
But if it is not the case, so when you have a case like this, where you have a carrying book value of 8.6, you sell it at 6.6, so that 2K difference, what that means is that you overstated your book value. That means you understated your depreciation in the previous years by 2,000. Your book value actually should have been 6.6 at this point, but it was 8.6. So now we give you, as a balancing allowance, we give you that additional 2,000 of depreciation of balancing allowance to basically on an ex post facto basis after the sale. It's as if we are allowing you to regularize your book value after the sale. Because by doing the sale, we found out that the market price is only 6.6, but your carrying book value is 8,000, right? So it is basically after the fact, we are giving you that additional 2,000 depreciation, which you should have got in earlier years.
It's like we put the earlier year's depreciation into this
Now,
current.
because it's only now by selling the asset we find out that the market value is too low, and therefore it's so basically what is happening is, so that means now you know how exactly it will be given. It will be because our goal is always to make sure the book value is equal to market value. So after selling it, you realize the book value is too high. So it's as if you give a balancing allowance after the sale to allow you to basically, after the fact, bring the book value equal to the market value. Because by adding that 2,000 depreciation again, adding the capital allowance of 2,000, you'll bring the carrying book value down to the market value.
Ideally.
That's the idea. And the opposite of this is the balancing charge,
Yeah.
which is where you find that the book value was too low.
Too low.
If you reverse this, if you say 6.6 is the book value, and you sell it and you get 8.6.
But here is no. We should do the opposite action to the depreciation. But
Yeah,
there
yeah.
is no depreciation. Oh, so we just cut a part of the depreciation.
Yeah, you have to cancel it basically, because so it'll just become the opposite of the balancing. Balancing charge is the opposite of the balancing allowance, which means here, if you just reverse this, if the book value was 6.6 and the market value becomes 8.6,
Yes.
you sell something which is carried on the books at 6.6 and you sell it and you find out, oh, market value is 8.6.
But what if the current depreciation is less than the previous balance?
Let's look at the example here. We are looking at this, so we won't look at this. So let me just look at this one. Okay, maybe I'll look at this one and try to look at the pro forma. We can just open your calc file 26 here. So maybe, yeah, so let's look at taxation, and let's look at your calc files. Where is your calc file? Yeah, there you look at your calc file. So you understood the concept of balancing allowance, right?
Yes, I totally understand.
It is just to basically, if you think about this always in terms of that book value is equal to market value, coming from the true and fair picture, right?
Yeah.
We always want to maintain that, but it's not always possible, okay?
Yes.
Sometimes we find out by making a sale that the market value is too high or too low, right? They're relative to the book value. As soon as we find out, what we want to do is we want to make an adjusting entry to equalize the two. So if we find that the market value is too low and the book value is too high, we will give you some additional capital allowance to bring the back book value down to the market value, okay?
Okay.
And the reverse for balancing charge.
Okay.
Because now we find that your book value, so let's say here for instance, excess depreciation and a balancing allowance and balancing charge. Okay, let's take this example of here, what I've done here. So actually maybe instead of making a separate video and later on, I'll do it right now. Okay, so this becomes recorded. So I said that, okay, so this may not be slide 34 exactly. Let's check what it is. Slide 34, where is the balancing allowance? I don't think it's 34, maybe later. Main pool and special pool is slightly later. Small pools and annual investment first year balancing allowance. It's actually slide 41 now. Yeah, so I've written it as slide 41. So we can actually write this also as slide 41 maybe. The slide 34 will confuse them basically. Okay, so if we write this as F2, then this we can write as slide 41, okay? So say slide 41, okay? So let's look at one case of balancing allowance, okay? So let's look at this, okay? Here we assume that when there's excess depreciation, that means that the excess depreciation, yeah. So that was too little depreciation. It's actually, no, this is not a thing. I have to see why I wrote this thing here. So let's take this example, okay? Balancing allowances. So let's say these are the years, okay? These are the years, okay? Here, these are the years, okay? And then we have a main pool balance, okay? So the end of year one, the main pool balance is 600. At the end of year two, you have this 108, okay? So you take 18% of the main pool, okay? You take 18% deduction on the main pool, and that becomes 108. So the year two closing balance is here, okay? So this is 492 is basically the 600 minus, okay, so this is actually the year two opening balance. This is the, because we take it always on the closing balance, so the year one balance, if we are taking, this actually is being taken in year one, okay? So let's assume that becomes year, so the years are not properly marked here. So we start with 600, and then we apply 18% on that. At the end, this is always the closing value, right?
Yeah.
So we apply 18%, it becomes 492. Let's say there's nothing else at the end, there's no other transaction happening in 490 in second year, okay? Then this will be correct, okay? So end of year one, we had 600. And so we applied 18% on the 600, and we got a capital allowance of, the writing down allowance is 1048. And let's say in year two, there was no, so 600 minus 108 already became, the opening balance of year two was 492. This is this minus this.
Yes.
And the closing balance, so there's no other transaction in year two, okay? So the closing balance, in this case, it's correct. So the closing balance also is 492, okay? Now, what is happening in year three, okay? So year three, again, now we are going to apply 18% on this. So this 89 must be 18% into the 492. Okay?
Okay.
All right? Okay, so we are assuming there's no intervening transactions in year three also. Okay? So at the end of year three, so the starting balance for, the closing balance for this basically is 492 minus 89. So this 89 charge is actually debited at the end of year two. Okay, so the end of year two, your carried forward balance is 403.44, and there is no transaction in in year three unless other than the sale. Okay, other than the sale. So then you are already starting balance of year three is 403.44, and the closing balance of year three is also this, just before the sale.
Okay.
Just before the sale. So you're carrying it on the books at 403.44. Okay, now you are selling it. But you sell it at the end of year three after you finalize the books, where the asset is carried at a balance of 403.44. But you sell it and you find you get only 100 for it. Okay? That means that in this case you will get the same story that I told you earlier about the 8.6 and the 6.6. Where you're carrying it on the books at 8.6, but you sold it and you find it's only 6.6.
There we need a balance. Allowance.
Balancing allowance, because first you have to think about it logically. If the book value is higher than the market value, okay, if the book value is higher than the market value, that means that you took too little depreciation. Okay, so we can write this here as basically is a case of book value, or we can write it from the market value point of view. That's the main focus, right? Market value less than book value. This is the case of market value less than book value, right? So if market value is less than book value, then automatically you can focus back on the book value. That means you say the book value is too high. Why is it too high? Because I took too little depreciation in the past. Okay? So now I should get back that, I should be able to compensate for that now. Because what do I want to maintain at all times? This is the important thing to remember. That what do I want to maintain at all times? I always want to maintain market value equal to book value, okay? So here, to maintain market value equal to book value, I found out that the market value is actually 100 and the book value is 403. So to bring this equilibrium condition, you can think of it like an equilibrium condition, because which accounting is striving for, right? So in order to, how do I bring the market book value down to the market value? If you remember it this way, it'll be easier. You don't have to memorize anything. Do you understand?
Yeah.
What is your goal all the time? To bring the market value and the book value together.
Yeah.
Here you found out the market value is only 100 and your book value is 403. So how do you bring the book value down to the market value? You have to you have to charge depreciation of the balance, that 303. Is that clear?
Yeah.
You have to charge further 303 of, not depreciation, let's call it capital allowance here, because that's what we are discussing, no? So you have to apply a balancing allowance, which is equivalent of further depreciation of the book value asset, book value down to, bring it down to 100. If you charge a further capital allowance of 303, now your book value will become equal to 100. So here if you take this, okay, so from here, if you take if you take this balancing allowance of 303, then this will become 100. Then your book value becomes equal to the market value. So how much balancing allowance to apply? The answer is, how much do I need to bring down the book value by to make it equal to the market value? Okay, so this 303, where is it coming from? The 303 is coming from this basically, okay? This is the minus 303 is coming from the book value minus market value. But I think if we do it by market value, so market value is less than the book value. So that's why it is coming out as a minus, okay? So this minus is telling you basically that you can, another way to do it is to do it this way. Another way to do it is to do it as this plus this result. If you write it as, it depends on how you write it. Book value minus market value. This is a case of, this is actually book value minus market value, this calculation, okay, which you can see. So if you see here, if you write it like this, so the book value is minus market value is causing this much. Okay, one minute here, how do we get this now? It's actually market value minus book value. That's what it is, okay? It is market value minus book value, okay? So you can see there's a deficit of 3. You just add this to the closing book value that you have, the latest book value, and if you do that addition, then it will come down to 100, okay? But it's clear, these are just maths. Actually, the maths is not so clear. And maths is clear, but even better is to think about it intuitively. That because true and fair picture of the business, market value should always be equal to book value. You make a sale suddenly and you find that sale is only giving you $100, where the book value is $403, right? So therefore the question you ask is, I have to always make market value equal to book value as quickly as possible. How can I do that? I need to bring my book value down to 100 because the market value is 100, right? When my book value is 403, how do I bring my book value down to 100? I have to allow a further balancing allowance of 303. That will bring my book value down to 100. Then problem solved, equilibrium. Book value equals market value. Is this clear?
Yes.
Now,
Very clear.
if you think about it like this, it will become clear. Otherwise, if you try to go, the maths actually is more confusing. The maths actually is quite clear. Maths is always clear by definition. But it's better to think logically. It will give you the right picture. And then you can always do it in the exam. Is this clear? You understood?
Yes.
Always think like this. I have to always make book value equal to market value because that is the purpose of accounting. True and fair picture of the business. So if I find that by making a sale, I discover that my market value is too low, is too high, okay? Okay, fine, that's too bad. That's what it is. That's what the market is. Now I have to quickly adjust my book value to bring it equal to market value. Now, when the market value is below the book value, I have to further depreciate the book value to bring it down to the market value. So I need a balancing allowance to bring the book value down to the market value, okay? Now let's look at another example. Here there's a balancing charge. So let's say same example, you buy the asset in the first year and then you don't do anything. You sell it at the end of the third year after calculating all your capital allowances. Okay, there's no other transaction. So closing balance of first year, opening balance of second year is equal to this. Closing balance of this one, actually closing balance of first year and opening balance of this year, of this, opening balance of second year and closing balance of second year is also this. How do we get 492? Is 600 minus 108. Okay, what is 108? 108 is 18% of 600. Clear? Okay. So we get this. Now, again, we do the same thing for the year 3. Okay, we close year 2 at this, and year 3 opening and year 3 closing is also at this 492. Okay, so again, if year 3 closing is 492, then how much? 18% on 492 is 89.
Yeah.
Okay, now, so this one now, same, actually the same numbers. Okay, same numbers as the previous example. Okay, so now after the end of year 3, before we make the sale, our book value is 403. 492 minus 89. Okay, now after we make the sale, okay, in this case we have given an example where this one is actually 40, is the balancing charge is 0. We can give a higher figure. Where is C18? Where is C18? C18 is here. Okay, I don't have to make it equal to C18 because here I've given 100. And let me enter this. Okay, let's make it this like something big, 750. Okay, now you understand what is a balancing charge. Okay, now what do you find? Your book value was 403, but you sell the asset and you find that it gets, that means market value is 750. Okay, so here's a case of market value not less than, but it is more than, it's not even actually, it's automatically writing it. Market value is more than book value. Okay, so again, same, always think of it in this logic, then only you'll understand it. Otherwise, if you look at which is to be plus and which is minus here, like this one, here is a minus sign, then you add this minus sign to the, then you add this and you get this. No, that will confuse you. If you go straight to the math, it will confuse you. Always think logically. What do I find? I find that market value is higher than book value.
Based on
Okay?
true and fair picture.
Yeah, for true and fair picture, market value must always be equal to book value. I can't do anything about the market value because that is determined by the market. What I can play with is the book value, right? So what do? I see my book value is 403 and my market value is 750. So I have to bring the 403, book value has to be increased by 750 minus 403, right?
Yeah.
This amount of 347, which is coming from, basically here if you see, this 750 is, this 347 is the 750 minus the book value, the market value minus the book value, right? So because I have to make the book value equal to the market value, I have to therefore increase the book value by this 347. Yeah?
Yeah.
How can I increase the book value? When I'm decreasing book value, I'm doing a capital allowance. If I have to do reverse of that, that will be a capital charge or a balancing charge. Okay? So that's what it is. Okay, so balancing charge means, in this case, it's not no adjustment. You have to add it back. It won't be no adjustment. It'll be add back. You understand?
Yeah.
Add back to taxable trade, add back the 347. You understand?
Yes.
Because you took too much depreciation. You took too much depreciation, that's why your book value fell well below the market value. Now we are going to cancel that for you. We are going to basically reduce your depreciation allowance, which is your capital allowance, which is basically means that we are going to increase your taxable trading profit. Right? Is it clear?
Yes. Very
Now
clear.
it's all clear. Good. Okay. So this becomes my balancing charge video also. Balancing allowance, which I could not cover. But this is very important to follow this accounting logic. Because otherwise you'll get confused. Because in the exam pressure you will forget, okay, this plus or minus. You can see, even though I am doing it myself, I'm also getting confused which one. Here I forgot that I had actually done market value. No, not here, this one. This one I forgot that I have done actually market value minus book value here. Okay, so it is consistent. Here also I did market value minus book value. But I forgot it because I thought it was actually book value minus market value. So it's very easy, even though I have created the spreadsheet. So if you go straight to the maths, it becomes, you can easily get confused. Minus, plus, this, that, so many signs. You have to always think logically.
Okay.
Then you can go step by step by step. You'll never get confused.
Okay.
Yeah? Is that clear?
Yes.
Okay, good. Very good.
Thank you. you.
Okay, welcome. Okay, so that becomes our video, and I'll save this and upload this separately.